What's up YouTube? My name is Gregory and you're on the channel Finance on Fire. Most recently, I reviewed the quarterly report of an American gold mining company called Barrick Gold, and my attention was attracted by a major deal to buy a stake in the company by Warren Buffett investment fund. Frankly speaking, this is not a typical trade for him, hence the more exciting it is for us to understand the deal in details. So the details of this trade became known to us after the quarterly report of Berkshire Hathaway was published. Of course, he doesn't tell anyone directly about his investments, but according to the laws in the United States, once in a quarter, it undertakes to provide all the information about the trade to the Securities and Exchange Commission. And this information became public. Buffett's company has acquired shares of Barrick Gold for about $500 billion. After the publication of this information, the quotations of the gold mining company rose by about 4%. Why did I call this transaction not typical? Because I haven't been able to find any information about Buffett investing in gold mining companies in the last 50 years. Moreover, he has repeatedly spoken out against investing in gold. Here's one of his quotes. First, people dig a hole somewhere in Africa and extract gold from there. Then they sell this metal to other people, who in turn just put it in the bank, hire security, and wait for some kind of miracle. This is extremely illogical behavior, and such asset has no value. So you might wonder, why did Buffett change his mind and decided to buy an asset in this industry? In my opinion, he saw a rather obvious undervaluation of Barrick Gold as a company. Usually stocks of gold mining companies grow faster than the value of gold itself. Of course, if the company is efficient and profitable, just like exactly Barrick Gold. In case of an increase in the value of gold, they receive an additional bonus to the margin, in addition to earnings themselves. But if we compare the change in gold price through the change in the value of the SPDR gold shares and the change in the value of Barrick Gold shares, we'll see that the price movement of these assets is not correlated, at least for the last 15 years. If gold has risen in price by more than 220% since 2005, then Barrick Gold shares have remained practically at the same level. And here there is a fairly strong imbalance, which can be realized in the form of an increase of the company's stock price. That means Buffett hasn't changed his principles. He didn't invest in gold as an asset, he just bought shares of the company that are far behind the growth in the value of its underlying commodity. In the same way, he could, for example, invest in the shares of an oil company or a metallurgical business, if he saw the same situation there. However, investors should pay attention to this situation for at least two reasons. First, a good illustration of one of the principles by which Buffett invests in certain companies, and second, opportunity to earn on buying Barrick Gold shares. By the way, I don't own shares of this company in my portfolio, but I'm considering the possibility of owning them in the future. Thank you for watching and see you in the next video.